everybody, and welcome to today's edition of Facebook Live. It is December 19th, 2018. I am joined here by Beacon CEO Mark Germain. Together, we are all going to have a fantastic discussion around required minimum distributions, better known as RMDs. If you would give me a minute just to give you a quick word from our compliance, and that is that today's broadcast is educational in nature. Please consult with your own individual financial advisor when it comes to structuring your financial decisions and your portfolio. So with that, Mark, we thought that today we would talk about required minimum distributions. It's actually a topic that appeals to a lot of people, right?
Well,
it's not
appeal
just
or
young,
not appeal.
Exactly, appeal and not appeal, but even to young and old. So RMDs can affect young people as well as people who are in a retirement in an older age cohort. So that's part of the reason that we're going to talk about required minimum distributions. You want to just give us a general overview and tell us why they're so exciting?
Well, we will call them exciting because this time of year, everyone's scrambling to make sure if they have a required minimum distribution, that it's actually getting done. So this holiday season is always our busiest time, making sure everyone has done theirs, because if you don't do it by December 31st and you're required to do it, expect that you could pay a 50% penalty. So if you require to take out $10,000 and you don't, you may have to pay a penalty of $5,000 to the federal government.
Can we rewind just a little bit? And for those people who do not know what a required minimum distribution is, can you just kind of give us a general explanation of what is an RMD?
Right. So I think the easiest thing is to think of two types of accounts you can have. You can have a taxable account, or you can have a qualified account. Qualified account means it's not taxable currently. However, that's an IRA, a 401k, a 403b, an IRA rollover, even an inherited IRA. Someone in your family passes away, you inherit it, that's an IRA. The IRS says there are required minimum distribution, RMD, depending on the age, depending on who you inherited it from.
So when you say required minimum distribution, and I use the word D with a capital D, does that mean that you're talking about actually taking money out of the account?
Yes. So what you're doing is you're taking money out of the account, and the amount of money that you take out is added to your current taxable income and subject to the tax rate in the year that you take it out. So if you're in the current 22% tax bracket, you would pay 22% tax on the distribution.
Well, I know that we're going to talk about the tax treatment in a little bit, but let's talk, okay, so that we know that it's a required minimum distribution. It's money that you literally have to take out of some accounts, and those are retirement accounts, correct?
They're all some type of retirement account. The only one you don't need to ever take money out of is a Roth IRA.
Okay.
You never need to take a distribution. So let's get that one off the table. All of the other IRAs, all of the 401ks, pension plans, you must take required minimum distribution. You must take it if you reach age 70 and a half.
That was our question, Mark. That was the question of the day, is when must you take it? Because a lot of our listening audience, we all have retirement accounts, or at least we should, whether or not those be 401k or a traditional IRA.
So you have to take it when you reach age 70 and a half, but the government allows you to defer it to the following April. So if I turn 70 and a half this year, I can wait till next April to take it out. However, I also have to take a distribution in 2019. So if I defer, I would have to take two distributions in the same year. So it requires a little bit of tax planning, making sure that you're not paying more tax than you have to. That's if you go and it's your retirement account, your IRA, you must take it out at age 70 and a half. If you inherit an IRA, you must start taking the distribution, oftentimes right away, regardless of your age.
Okay, so George here turns, let's go with that example again, just to reiterate what you were saying. George turns 70 and a half in this year. He turns 70 and a half. Let's say George has got a birthday on Christmas. George is 70 and a half, I'm sorry. George is 70 and a half on Christmas Day of this year, December 25th, 2018. When must George
Next April.
Next April, April 2019.
We suggest he does it this year.
Okay, we suggest that he does it this year before, and that's because
next year he'll have to take 2 distributions.
Okay.
So barring higher income this year and lower income next year, that he's going to be much lower income next year. Hence why we think you need to go to your advisor and have them take a look at what do I actually have to take out, when do I have to take it out, and how should I take it out. Okay? And there's a very unique feature. For those people who are charitable, can actually give up to $100,000 of their required minimum distribution, can just send it to a charity and not pay any tax on the distribution.
So if George is feeling very charitable this year, he can just, what you just outlined, up to $100,000?
Right. So let's say he has to take out 25. He could send the entire 25.
Perfect.
Okay.
Okay. But now if George, unfortunately something happens to him and he's no longer in the picture, then if he were to leave that...
So let me give you a situation.
Yes.
Okay? So he dies, his wife inherits
yes.
his IRA.
That's what I wanted to say.
She gets to use her age for the calculations.
Which is what we're going to get to, right? In that next screen. How do you figure? So your age is an important part, right?
So let's go to the table.
Okay.
I think it's really good if we go to the table and say, if you're 70 and a half, you're going to divide the balance that's in the account by 27.4. What are they saying? Their expectation is that you're going to live for 27.4 more years. So you're going to divide it by 27.4 at 70. The next year you're going to divide it by 26, and it goes to taking a bigger and a bigger percentage. So the balance is what did you have in that account December 31st of 2017 if you're taking a distribution in 18. If you're taking one in 19, what is my balance December 31st, 2018?
So just to clarify again, what you were just describing when we looked at that table was part of the process of how you figure what that required minimum distribution amount should be. Obviously, you're a financial advisor, so these are, and it sounds like it can be something that's very actually complex. Looking at that table, there were a lot of numbers on the table, but that's part of the equation. The other part that you talked about was your account balance, and the third component is your age. Do I have that correct?
You do.
Okay, great. And depending on where you fall, again, what if George's wife is, what if George is passed away, but George's wife is 85?
She has to draw it at the higher number.
Okay, right. And so, and here it is.
I think we're getting a little too complicated for.
Well,
okay.
So the bottom line is consult your financial advisor to figure out your RMDs. Okay. The other question that we have is, what about how RMDs are taxed? Again, that money, I'm withdrawing that money, and how is it? I have to pay tax on that?
Of course. Why? Because you have not paid tax on it before. When you put it into the IRA, you got a tax deduction at whatever the tax rate was then. When you put it into your 401k, came off of your paycheck and you did not pay ordinary income tax on it. Now you're taking it out. It's getting taxed at the ordinary income tax rate. All IRAs, all 401ks, everything gets taxed at your normal tax rate that year. If you take a big distribution and it pushes you from 19 into a larger category, you're going to pay at the higher tax rate.
Right, and this is the married filed jointly. And I know that you've done some events. You just had an event in Florida. The Tax Cut and Jobs Act really, all of a sudden, these income ranges and these tax rates are completely different, right?
Well, the top bracket came down 2%, but what's really important, not for this discussion, but the middle brackets expanded and cover more area, so many people will see tax reduction. The second part, and we didn't talk about it, is 401ks.
Mm.
So you can have an IRA. All of these items, every type of IRA account is subject to RMDs. If you're still working and you have a 401k plan, you do not have to take the distribution at 70 and a half if you're still working and you're not a primary owner of the business. So if you're an owner of the business and you have a 401k and you're 70 and a half, you have to take it out. If you're not an owner of the business and you're 70 and a half and you have a 401k, zero this year that you have to take out.
What if I'm working for a university
Same
and I
thing.
have a 403B?
Exactly the same.
Okay.
Exactly the same. SEP IRAs, simple IRAs, all simple IRA is by definition an IRA. It's going to fall in the IRA rules. You must take it.
Okay, so RMDs, profit sharing plan, 401ks, 403bs, traditional IRAs, simple IRAs, SEP IRAs, SAR-SEP IRAs, and Roth 401ks.
Right.
And wow, that's a lot.
So I think without trying to cover every single topic
Sure.
is very difficult in a Facebook Live. But anyone that has an account and they have questions, one of the things that we provide for anyone that were to get in touch with us either through our website, get in touch with Carl and say, geez, can I talk to someone and get an analysis of what I have? I have this much in my pension plan and this is my birth date. How much do I have to take out? We'll be happy to tell you.
That's great. And
Okay.
I know that there were some concluding remarks that you had about RMDs, which you talked a little bit about the top of the broadcast. If we could just close with those ideas.
Right. So one, if you do not take your RMD when you're supposed to, you could be subject to a 50% penalty. So not only is it a 50% penalty, but then you must also pay tax on that 50% penalty.
Wow.
So if you were supposed to take out 10, and let's say you're in the 20% tax bracket, that'd be $2,000 in tax. If you didn't take it out, the IRS is going to take $5,000 and 20% tax on the $5,000. So you're going to take $6,000 more, and you will be not in good position.
And then the other, you talked a little bit about this earlier too, the Roth IRAs, no required
That's
minimum
correct.
distribution.
That's correct.
And then that whole distinction between inherited IRAs, we use the example of George. It's different.
It's different if you're a sibling or a friend.
Mm-hmm.
A friend is going to have to, if you've already started to take your IRA distribution, your friend uses your age. So if your friend is 25 years younger than you and normally would be taking out less, too bad, you have to take out at the person who had already started to take the withdrawal out.
And that's why we also saw that table. There was, if you looked at it closely, I noticed there were no earlier ages other than age 70.
That's correct.
Okay, great. And then the last is you had talked about, how do people get in touch with you, Mark? What is the best phone number and email address to reach you if you have a question about RMDs?
One, they can go directly to our website, bwmllc.com, and they can put in a request for information, which we will get back to them with the results. So they can put in their information. I have this much in this type of retirement account, and on this age, how much do I have to take out? 2, they can call the office, 201-447-9500, or they can send an email to Carla, Karla, at bwmllc.com. Any one of those methods will get one of our advisors to give you a call back and say, this is what you would need to take out of your IRA account. Purely complimentary. There's no expectation you need to bring that in for us to invest. Okay?
Great. Well, fantastic. Well, Mark, thanks again for the information today. And thank you all for attending today's edition.
And happy holidays to everybody.
Yes, happy holidays, and happy new year. The best in health and happiness to you and your family. And please let us know if we can answer any questions for you. Mark would love to hear from you with your R&D questions.
Thank
Take
you.
care. Thanks so much.